Okay, now we are on question 2.2. Complete the notes to the financial statements as a 29 February 2020. Note: Happy Limited show all their current liabilities under trade and other payables and not separately in the balance sheet. 2.2.1, they want us to do the trade and other receivables. 2.2.2, ordinary share capital. 2.2.3, that's where we do the trade and other payables. The ordinary share capital note, we've already covered it. And what is only left is the trade and other receivables and the trade and other payables. But remember, for you to be able to fully understand what we're doing under these notes, there is also information that is coming from the adjustments that we looked at in 2.1. You need also to consider those. So you need to have a full understanding by watching all the other adjustments that we have already done previously before you can actually look at 2.2.1. Okay, let's start. The trade and other receivables. The trade and other receivables, we start with our debtors. Our debtors control. The amount for our debtors control is given in the pre-adjustment trial balance. The debtors control is how much? 161,969. And there was adjustment number A, which said the following adjustment relate to their debtors. Debtors, remember, these are customers to whom we have sold something on credit. So there was this selling, there were these goods that were sold to the debtors, 2,256. Remember, they were returned, is it? Thus, we are supposed to reduce our debtors control by that amount. Okay, it's 2,256. Okay, let's subtract and find out how much it's going to be. We'll remain with 159,713. 159,713. When after the debtors control, remember we first calculate our net trade debtors. We go on to recording the provision for bad debts. The provision for bad debts, okay? According to our question, the provision for bad debts here was 7,920, 7,930, 7,930. But which one do we actually record in the trade and other receivables? I want you to listen to me closely. When we are looking at the note for trade and other receivables, and we are looking at provision for bad debts, there is an amount for provision for bad debts that is shown here. And there's usually another one that will be given on the adjustment. Let's go back to adjustment number A. It's either they will give you information whereby you are supposed to calculate it as a percentage of the debtors control. But here they've given us provision for bad debts needs to be adjusted to 8,200. Okay. So when you are doing this note, you do not record the one that is in the provision for bad debt, that is in the pre-adjustment trial balance. You take the one that is on the adjustment or the one that you would have calculated according to the information that would be given. So in other words, I'm saying that the provision for bad debt that you are going to record is 8,200, not 7,930. But here we are simply now going to indicate that our provision for bad debts increased. By just looking at them, we can see that it increased, is it? By the difference. What was the difference between 7,930 and 8,200? If you remember very well, when we calculated an increase in provision for bad debts, we had an increase in provision for bad debts of 270. So we say plus 270. Doing this calculation will also earn you a mark. So it is imperative, it is important for you to also do that calculation. Remember, the provision for bad debts, they reduce our debtors control. Okay, so we need to subtract so that we can find our net trade debtors. Our net trade debtors. Okay, let's subtract 8,200 from 159,713. We'll remain with 151,513. 151,513. So now we look for any other item that actually makes up the trade and other receivables. So from everything that we have done in our adjustments, remember again to consider all those other adjustments that we did before when we were looking at the income statement, is it? So according to this question, we actually had accrued income. We had accrued income. Accrued income is also a part of the trade and other receivables. Accrued income is income that is receivable. Accrued income, okay. Where do we have the accrued income? We go back to adjustment number F. Adjustment number F on the fixed deposit. If you go back to the calculation that we did, you'll find out that we had an accrued income amount. Okay, first of all, let's record, let's find out exactly, okay, how did we actually find that accrued amount? Remember, we were given interest on fixed deposit 9,050. This was not all the amount that was supposed to be received. There was another amount that we calculated to get the accrued income. So the accrued income was 3,375. 3,375. So what you simply do is to go back to the note for interest income. I'll show it here. Interest income calculation or adjustment. You go back to the adjustment that we did for interest income, the interest on fixed deposit, you'll be able to get this 3,375. Okay, so for this note, this is all that we're supposed to do. The balance at the end was not required. We're supposed to end here. But if ever you wanted to calculate the balance at the end, you are simply saying the net trade debtors plus the accrued income, and then you get the balance at the end. So we are done with our note for the trade and other receivables. Which other items anyway might you find being a part of this note? If we had prepaid expenses, we're also going to record them here. But according to our question, this was the only item that we found, the accrued income, and it was on the interest income or the interest on fixed deposit. So we are done with 2.2.1, and it only had 6 marks. And the only thing that I can say here was a little bit tricky, was maybe remembering the 2,256. It was a matter of you paying special attention to what has been written on adjustment number A, that the following adjustment relates to their debtors. That is the reason why we had to remember it and actually take it also into consideration. Okay, thank you if you have fully understood 2.2.1.